Want to know what's going on in the multifamily market here in San Diego for the first half of 2023? We'll stop right here, stop the scroll, and I'm going to give you everything you need to know, all the stats on prices, deal volume, rent growth, and vacancy. And if you stay to the end, I'm going to give you some tips and tricks on how you can still find a great deal here in San Diego. Let's go. But first, a little bit about me. My name is Carrie Gonzalez. I'm with Simonowski & Associates. We are a commercial real estate brokerage here in San Diego, and we specialize in multifamily real estate, as well as helping investors just like you buy, sell, and exchange rental properties. So I'm gonna get to the good stuff now. All right, so here we go. We're gonna do an update just for San Diego for multifamily, and this will be January to June 2023. So basically we've had a little bit of a decline in prices in terms of 5 and up units. We had the average sales price per unit for first half is around $350,000, and cap rates are actually increasing in San Diego to around 4.5 to 5.5%. That's nearly 100 basis points higher than last year in the first half. So you can kind of see when cap rates go up, prices are coming down a little bit. And that's a lot of that is obviously a factor of interest rates having risen so fast. In terms of sales volume is way down. It's 60% lower than the first half of 2022. And the number of transactions in general this year has been 40% lower than average. A lot of investors are just staying on the sidelines. There's a lot of sellers that don't really need to sell. They don't have a lot of motivation to sell. It's harder to do an exchange and things like that. So there's just a lot lower transactions, and then buyers are kind of looking for the best deal possible because interest rates got high so quickly. So you can see on that graph. All right, now we're going to turn to small multifamily. So for the first half of 2023, prices went down a little bit. We have the average sold price was 1.38 million, and that's down from first half 2022, which was 1.45. And then we have the average price per unit, which is $512,000 here in first half 2023, again, down a little bit from last year, which was $528 per unit. And then in terms of median price per unit, it was $445 for the first half of this year versus $462. So it's not a huge difference, but any kind of decline in prices is actually kind of news for San Diego because we usually have prices going up. But you can see in comparison to 5 and up units, the price per unit is pretty high for small multi. And obviously that's because you can get long-term financing on those. And you can also, a lot of people are buying those and putting ADUs on them. And then the other thing is that some people want to occupy one unit and rent out the rest and kind of do a house hack kind of thing. The average days on market is definitely up 42%. So that's 37 days is the average days on market. And then number of properties sold is almost 40% fewer properties sold in first half than first half last year. So that's kind of the multifamily update here for small multifamily. So 2 to 4 units. And then we also have rent growth. So one thing that's great about San Diego is San Diego rents tend to go up over time. People are always going to want to live here. Like, let's face it, we have like the best weather in America. That's just my humble opinion, but people are always going to want to live here. And so rents are going up. It's a 3.4% increase versus a year ago. That's not true everywhere in the country. We had some very high rent growth. In 2022, it was 5.6%. In 2021, a whopping 13.2%. So rents are still going up here. We actually had the 7th highest annual rent growth out of all the largest metros in the United States. So if you want rent growth, this is the place. And remember, so that's how a lot of people do their underwriting. They actually kind of all right, if I break even with rents right now, they're kind of depending, which you shouldn't, but they're kind of depending on, look at this history of all these rent growths, right? So they're kind of saying, well, in 5 years, I'm going to be getting a lot more rent, right? And so San Diego's had the fastest rent growth of all the California cities. LA is only up 1%. Orange County is up 0.6%. San Jose is flat, and San Francisco is actually down in terms of rents 0.5%. A lot of people have left San Francisco and left LA, and guess what? A lot of them are coming here. The people moving to San Diego from other places, the primary places that they're moving from is San Francisco, LA, and then Chicago. And then we have low vacancy rates, and also unaffordable single-family homes are providing stability for our investors here because people are going to need to rent, because when interest rates are high, it's harder for them to buy. All right, now we'll hit vacancy. So vacancy rates are still super low at 3.5% as of June 2023. The rise in vacancy rate, I think, is really driven by a few downtown apartment buildings that had all opened at the same time. And so they haven't been fully absorbed into, getting them fully rented. And so downtown San Diego actually had the highest vacancy rate in all of San Diego County at 6.2%. Again, they've got a lot of high-end, large, high-rise buildings. Vacancy rates can be lower for the more affordable units, especially out in the suburban markets, and anything with lower rents than what we're seeing in the city center. So you can see here, vacancy has been pretty low historically in San Diego, bouncing between 4 and 5%. But after COVID, we've actually hit very, very low vacancy, and we're around 3.5%. All right, so how can I help you, right? I guess that's the big question. So I can help you by doing the initial underwriting for you. So if you are looking for multifamily deals or any kind of rental properties here in San Diego, and you let me know how much money you have to put down, I can actually underwrite deals to help you figure out what are some properties that you could buy. If you also let me know things like your cash on cash return or your return on equity, I'd be happy to add that in and make sure that any of the deals I send you actually meet your criteria for buying, and it saves you a lot of time. And then I also am a creative finance specialist. I can actually look for deals for you on the MLS. There's like a box you can check. And you can actually find MLS listings that offer creative financing, seller financing. So I can help you with that, and that's an opportunity to help you get a better interest rate than the banks are getting right now, or possibly a lower down payment, maybe interest only terms, something like that. So hit me up, send me your buy box. You can text me, you can email me, whatever is easier for you, and we'll see you on the next one.